Hi, my name is Hector Garcia, and I want to talk about sales tax in QuickBooks. Now, before we get into the in and outs of how to manage sales tax in QuickBooks, let me first make a very important statement. Number one, sales tax rules vary from state to state. So, depending on which state you are in the United States, the sales tax rules may be different. Not just a matter of tax rate, just also on how you file, what items, what transactions are taxable, and different rules regarding refunds or cash versus accrual basis. So you may want to consult with a local accountant or a sales tax expert in your area. My email, it's going to be below this video. If you email me a question that is not a Florida sales tax question, I will probably refer you to another accountant, a colleague. I know accountants all over the country, so I could refer you to someone else. But the examples I will make will be based on Florida because that's I am a CPA in Florida, and that's the stuff that I know, just Florida sales tax. I really wouldn't know any more other than the basics on sales tax in other states that is not Florida because, again, each accountant typically is licensed in a specific state, and that's where they practice. Anyway, we're on QuickBooks Online now, and the first thing we have to do is we have to make sure that our sales tax is enabled. Now, what you're seeing on the screen here is a brand new QuickBooks file. It has no transactions, and we're looking at QuickBooks Online. There'll be a different section that will discuss QuickBooks Desktop. This one in particular, we'll start with QuickBooks Online. So the first thing you want to do is on the left of the screen, you're going to see a button that says taxes. So you're going to see the taxes button on the left side of the screen. And what you want to do is you want to make sure that once you click on taxes, that you will have either payroll tax or sales tax set up. In this particular case, you see right there, it's very obvious that it's not set up because there's a button there that says set up sales tax. All you have to do is just click on the button and follow the process. So we're going to go ahead and click on set up sales tax. And the first thing it's going to ask me is, well, what do we want to call our sales tax if we have a single rate, or will there be multiple rates? So that's basically the two questions you have here is, do you have a single rate, or do you have a combined rate that has, multiple parts and stuff like that? So let's start with combined tax rate. And I'll kind of explain what that means. So in this case, sales tax name, we're going to call this Florida sales tax. And then on the component, we'll start with Florida sales tax, and this would be Florida Department of Revenue. And in the case of Florida, the core sales tax rate is 6%, but there's specific surtax in a county. So for example, in Miami-Dade County, which is where my office is, there's a 1% surcharge. So I'm basically going to use the same agency name and then add the 1% in it. And then all I have to do is click on save. And there you go. You're going to have a combined sales tax being set up for you. Now I can create more sales tax items. Okay, so if you click on the right-hand side, you see a button that says add edit tax rates and agencies. And when I click on that, you see right there my combined sales tax rate, and we have my several individual tax rates. So you don't have to create the combined one. You can just create one unique one, or you can combine them. It's really up to you how you want to do it. Let me show you a different example. I'm going to click on new, and then I'm going to create a single tax rate, and I'm going to call this Miami-Dade sales tax rate. And then I'm going to use the same agency name, and I'll just call this one a straight 7%. And that could be a single tax rate. I can hit save, and that works just as well. Now, the reason why I'm showing you this example is because in some states, this is not a thing. In some states, you will have a uniform tax rate across the board for the entire state, and that's it. In some states, you have the surtax concept. In some states, you're going to have your regular sales tax, and then you may have an additional sales tax depending on the transaction. Like in Florida, for example, there's a special sales tax for hotels and that sort of thing. So it's like kind of called a tourist tax, right? So again, it could be different sales tax in different states for different circumstances. Again, you should definitely consult a local accountant. Anyway, that's it. So I'm done with doing that. So I'm going to click on going back to my sales tax center. And by the way, this screen, the sales tax center, and I'm just going to click on dashboard real quick. That's the screen that pops up when I click on the taxes tab on the left-hand side. When I click on taxes, you go straight into the sales tax center. Okay, if I had payroll enabled, then it would ask me whether I want to go into payroll tax or sales tax. And that's pretty much about it for setup. Now, let's start creating some transactions, some sales that have sales tax in it. Okay, first thing before we jump into that to know is if you already have an item list created in QuickBooks Online, one of the questions that it asked me when I was creating the tax rates, it asked me whether or not I should mark all the items taxable. And we didn't pay much attention to that part, but that was a really, really important part of the setup, which basically means, do I make all the items taxable, or does the user manually turn off on taxability for specific items? So let me explain to you what that means. Let me click on the gearbox on the right side of the screen, and then I'm going to click on products and services. This is the place where I enter my products, my services, all the things that I'm going to sell. So I'm going to click on add a product or service, and I'm going to start with a service item. So let's say, for example, this is going to be, let's call it a delivery. Okay. And I don't want to get into the weeds in terms of why or when delivery is taxable. Let's say that for this example's sake, delivery is generally not taxable. So in Florida, there's special rules. Typically, delivery is not taxable, but if it's combined with a product and the customer doesn't have the choice of picking it up, means that you have to pay for delivery in order to get the product, then delivery becomes taxable. So that's a Florida rule. Don't shoot the messenger on it. That's just how it is. So I'm going to go ahead and by default, I'm just going to call it non-taxable. But again, there's special rules. So I click on save and close. And then I'm going to create a product. I'm going to go to new, and I'm going to create, let's say, a non-inventory part. Let's say, for example, I'm going to sell a cable. So I'm just going to call this USB cable. Let's say for whatever reason, that's what my company does. It sells USB cables, and I'll make this $25. And I have to make sure that I do mark that taxable because that's a product. And generally, product is taxable. So I'm going to go ahead and hit save and close. And now I got both my delivery and my USB cable. I'm going to select the two products that were there by default, and I want to go ahead and make them inactive. That way, I'm not seeing anything that I shouldn't be seeing. Actually, in this particular case, I can't. So these two are the default ones, so I can't make inactive. But just take a look at delivery and USB cable. Those are the only two things we're going to be dealing with for now. Now, I'm going to go ahead and click on the create button or the new transaction button in the top right. That's a plus sign. I'm going to click on invoice, and I'll create an invoice with sales tax. So we'll start kind of going through the process. So I'm going to go to new customer. Let me create a customer, and I'm going to call this a Miami corporate client. Okay. And then I'm going to hit on save. And then I just created the customer. I didn't put any addresses and stuff for now. I'm going to go ahead and select the product. Let's say I'm going to sell them a USB cable. And notice by default, their check mark for tax is set. However, I haven't told it what the sales tax rate is. I would have to pick from my sales tax list on which is the one I will be using. So whether I will be using the combined one or the one that I used by itself, that will work. I'll do both examples just so you can see what the report looks like. So I'm going to use the combined one for now. And notice that the rate is stated here. And then there's a box in which I can modify sales tax. Now, I wish that box in which I can modify the sales tax didn't exist. I actually hate the fact that people can change sales tax because this could really mess things up, but I also like the flexibility of being able to edit it. So I'm kind of torn whether or not I love that feature. I guess I would really like for me to be able to disable it and enable the capacity to edit that. Anyway, let me add another line here. I'm going to add delivery, and notice that by default, delivery is not taxable. So I'm going to make that $10, and then you're going to notice that even after I make that $10, my sales tax doesn't change. Why? Because I didn't mark it taxable. If I were to mark that taxable, just hit that check mark, you see that the sales tax goes up, right? So that's basically all it takes is for you to tell it, yes, it's taxable, no, it's not taxable, okay? I'm going to go ahead and click on save, get that done. I'm going to close out the invoice for a second. I'm going to go ahead and create another customer. So I'm going to go into the sales section and then to the customer section, and I'm going to create a new customer from scratch just so we can discuss a different concept. So I'm going to click on new customer, and then this went into the full new customer screen, and then I'm going to call this customer Broward Client LLC. Now, if you're in South Florida, you know what Broward means. That's actually another county in Florida, and that actually doesn't pay the 7% surtax. So I can actually give it a default tax code that is different than the one that is there. Now, notice I haven't created that tax code yet. So I'm going to back out for a second. I'm going to hit cancel, go back into taxes, and then create that separate tax rate. So let me go into add edit tax rates and agencies. And then I'm going to click on new, and I'll create a single tax rate. And I'm going to call this Broward sales tax. And then I'll use the same agency name. And this time I'll make it 6%. Again, remember when I created the first 6%, I made it as a component, not as an individual. And components don't show up if you don't create them as individuals. So that's an important lesson to learn about that. So let me go back and create, we were going to do customers. So let me go back into sales and then customers and then create new customer. And then we're going to call this Broward Client LLC. And then the really important piece about this is clicking on this tab called Tax Info and then hitting the drop-down menu and selecting Broward Sales Tax as the default sales tax item. And the purpose for that, for selecting that sales tax code, is that next time I go ahead and create an invoice for this client, so let me create a new invoice, I don't have to actually select the sales tax rate. It gets put there automatically for me. So let me go ahead and pick the USB cable. Let's say I'm going to sell this guy 10 of them, and automatically is marked taxable because the item itself is taxable. And then I'm going to go ahead and select the delivery, and let's say that's going to be $5, and there it is. So you actually get to see the taxable subtotal there. You see whatever it's your sales tax rate, and you see everything get calculated in there. So I'm going to go ahead and click on save and close. And I'm going to show you one more example. So I'm going to go back into my customer list. So I'll click on sales, customers, and create a new customer. And then I'm going to create a customer in New York. So I'm going to call this New York Customer Limited. Okay. And this customer, I'm going to go to tax info, and then I'm going to unmark the customer's taxable. Why? Because they happen to be a customer that I don't charge sales tax for. Now, that could be because they are an out-of-state customer, or it could be just because for whatever reason they happen to have a tax-exempt certificate or whatever it happens to be. So I'm going to go ahead and click on save. Okay, and then I'll create an invoice for this customer. Okay, let me pick the same USB cable. This one I'm going to sell them 1,000 units. And even though this is marked taxable, the item is taxable. So the item is supposed to be taxable because I don't have a sales tax rate set up for this customer, or I left it blank in this case, no tax is being calculated. So this little tab of taxable that could be relevant, and we'll talk about that when it comes to the reports as a whole other ball game. But for the time being, just know that although the item is supposed to be taxable, it's not being taxed because we have not selected a sales tax rate. Now, the problem is that even though I mark this customer as non-taxable in the setup screen, I can still select a tax rate and it'll calculate it for me. The only way to now get that back is to just delete that tax code in there, and then it will revert back to 0 sales tax. So let me go ahead and click on save and close. And I'll show you one more thing with tax rate. So I'm going to go back into taxes, and then I'm going to click on add edit rates and agencies. I'm going to click on new, and then I'm going to call this one out of state. So basically I'm creating a sales tax rate that's out of state at 0 rate. Now the purpose of doing that is so I don't put no sales tax code, that I actually give each customer a code instead of leaving a blank in there. And that may be a better choice than just leaving a blank, because sometimes when you leave a blank, it may confuse the user and may feel that they have to put something in there. But by creating an out-of-state code at 0, that helps as well. And you're going to see the difference on the reporting side. That's really important. So let me create a new customer. I'm going to create a new invoice, a new customer, and I'll create a new customer in Ohio. So I'm going to call it Ohio Sales Corp. And I'm going to go into details. And then under tax info, I'm going to call this one out of state. So I'm marking it taxable, but I'm calling it out of state, which is actually a 0% tax rate. I'm going to hit save. And then I'll go ahead and sell this customer also a whole bunch of cables. And delivery. And notice that it is showing up as a taxable subtotal. So it is calling it a taxable sale, but it's sending it into the out-of-state tax code. Now, all this stuff is going to have reporting implications, which we're going to see in a minute. So I'm going to go ahead and click on taxes. And then in this screen, I'm going to get to see gross sales, taxable sales, tax amount, and balance. And this is the stuff that could go to get really, really confusing when I'm not picking the right sales tax codes and that sort of thing. So I'm going to go ahead and click on view report. And we're going to see what the sales tax report looks like. So right now we're seeing that we have, in this case, a tax $25 of taxable amount at 6%. We have $25 of taxable amount at 1%. That's that combined rate we were showing you earlier. And then we have this $250 tax at 6%, and then $1,000 tax at 0%. That kind of gives you an idea more or less on how that sales tax is reported. Let me go back into the taxes and the tax center screen again. Now, one of the challenges with this is making sure that this is accurate. It's one of the really important things that people want to make sure before they prepare a sales tax report. So the first thing I want to do is I'm going to real quick just review all my sales just from a sort of a faraway view. So I'm going to click on reports and then click on profit and loss, and I'm going to run that real quick and then click on all dates and then hit run report, just so I can get an idea more or less what my total sales are. So that's $26,390. I'm going to click on that, and there are all my sales. So you see I got that one sale for $25,000. If I click on that right there, it doesn't have any tax rate whatsoever. So this could be a good thing, it could be a bad thing. Let me explain what this is. So that $25,000 should, in theory, show up in my non-taxable sales report. So when I come in here, it does show gross sales. But when I actually view my sales tax report, it only shows my taxable sales. It doesn't show my non-taxable sales. So that's kind of the challenge. That could be a good thing, but that's confusing because it's showing that my $1,000 are taxable. So that's a whole problem unto itself, the fact that this $1,000 show as taxable. So if you want to avoid having the $1,000 showing as taxable, what you could do is you can go back in the taxes screen and then go configure your out-of-state, in this case, your out-of-state tax code. And then in this case, what I'm going to do is I'm going to deactivate it real quick. And then I'm going to create another one called out of state / exempt. And I'm going to call the agency itself out of state. So notice that I'm not tying it to the same Florida Department of Revenue agency. I'm actually creating an entirely different agency name. And then I'm going to go back into my Ohio sale, which I don't remember which one it is. Let's see if we can find it here real quick. That's not it. Let's see if it's this one. This is my Ohio sale right here. And then I'm going to change this one and put my out-of-state exempt. So I'm actually going to use that special sales tax code that I created that is actually tied to a different quote-unquote sales tax agency. I'm going to hit save and close. And basically what I'm doing is showing you different examples. So when we see the reports, we get to understand what's going on with the reports. So notice now this is pretty neat. Now I got an out-of-state gross sales amount, right, under the out-of-state number, and then I got a Florida Department of Revenue under the Florida Department of Revenue agency. So now we see them as two different brackets, and the reason why this would be valuable is because maybe I don't want to see the sales calculated in the Florida Department of Revenue side, so I would put them into a whole different group altogether. Now, why are these $1,000 taxable? That's a whole another story. Now let's take a look at that. Let me go into the $1,100 here. It's because I have this little check mark called taxable. So if I don't want that $1,000 to show as taxable, I mean, regardless, I'm not tying this invoice to any tax rate anyway. So if I unmark that taxable check mark and then I hit save and close, now we're going to see the reports look a lot different. Notice that no taxable sales are even reporting because none of the items have that little taxable sale check mark on it. So those are like sort of all the little nuances of it, and just kind of keep that in mind when you're creating, especially out-of-state sales. You may want to make a choice whether you leave it blank or you create a different code. Just use a different agency so it doesn't get all confused in there. Now, another really neat thing here is this report here called the taxable customer report. And basically what that is it will show you all of your customers and then whether or not they're marked as taxable and what their tax rate is. And all that stuff becomes relevant later on in the future for you to audit your internal processes and to make sure that your system is automating that sales tax calculation. So that's a really neat report from the sales tax portion. And there really isn't much else to do other than maybe change the sales tax settings. So I'm going to click on edit sales tax settings, and anything that you can do here is very limited to yes, I do sales tax. No, I don't do sales tax. That would basically disable sales tax altogether. Or if you have it turned on, you can choose a default tax rate, which basically says, hey, by default, use the Broward sales tax rate because that happens to be the county that my business is set in or whatever. So that means that if I don't put a sales tax code, it will put that as default. And then this little 2 check marks that says mark all new customers as taxable and new products as taxable basically means that it will be defaulted to be on or off in the customers or items if I want them to. Okay. And then finally, making the sales tax payment. So what you'd never want to do is create a bill for a sales tax payment or never use credit card charges, never use expenses, never use check. In other words, don't pay your taxes using any of the things that you see in here. You have to click on taxes and then you have to click on record tax payment. That's how you should record your tax payments. Now, QuickBooks as of now will not electronically pay your sales tax. You still have to go into your Florida Department of Revenue website or whatever state you're in and pay electronically, or you still would have to fill out the sales tax form manually or through some other system and send the payment separately. QuickBooks as of now is not connected to any states for sales tax purposes. So that's a really important piece of information. Although you still have to come in here and mark it paid, marking it paid here doesn't really pay it in the real world. Anyway, so let's say I went to the Florida Department of Revenue website, or I filled it out by hand or whatever, and then I'm going to record the tax payment. So I'm going to click on record tax payment, and then it's going to ask you, okay, which bank did you pay with? You select your bank account if you happen to have multiple. You're going to say for what period, so month ending July 31st, whatever it happens to be. Then the date that the money's coming out of the bank, the total dollar amount, and then you can add some notes if you want to, or if you're going to print a check, you can just click on print check, and it's really that simple. Now, if you click on make adjustment, that really is if for whatever reason your QuickBooks is all jacked up and you have a separate system in which you calculated your sales tax and you want to record it and adjust it to match that system, then you would use make adjustment. I would tell you, don't get into that unless you're working with a trained QuickBooks expert, because you really don't want to mess up your sales tax. Anyway, you click on record payment, and that's it. Now, another question that I get is, well, how do I file my sales taxes? Again, this is going to vary state by state. However, in Florida, the form is called the DR-15. This is the most common form that's being used. The DR-15 could be used for monthly, or it could be used for quarterly. Now, normally what Florida asks is for you to report your gross sales, your exempt sales, which is basically the sales that are not taxable, your taxable sales, and then at the end, the actual tax you charged. Those are the 4 components that you need. From there, you can manually fill this form or fill it online. In QuickBooks, what you actually get is your gross sales, your taxable sales, and your tax amount. You don't get the exempt sales. So you would have to make that calculation by hand. In the case of Florida, for example, you have to calculate that by hand and take my gross sales minus my taxable sales, and that is my exempt or non-taxable sales. Again, different states request different information. So I wanted to make sure that I make that very clear. Anyway, that's how to set up and manage sales tax with QuickBooks Online. On the next video for this, we'll talk about sales tax in QuickBooks Desktop. Thank you very much. If you like this video, click like, subscribe to the channel, add some comments below, maybe some questions. And again, if you email me and you're in a different state, I will try to connect you with one of my colleagues that's an expert in sales tax in your state, or to handle your specific situation. Thank you very much.